1, everyone. Welcome to the Stock Market Morning Prep video for Wednesday, March 26. Consumer confidence comes out better than expected, pushes the markets higher. Dow Jones up 91, Nasdaq up 7, almost 8 points, S&P up 8, and the Russell down 18 cents. Took a little bit of a breather. Now that came all due to we had a better number. Markets actually sold off pretty much most of the morning, and then right around 12:30ish, the markets popped up and decided that it wanted to move higher for whatever reason. Consumer confidence numbers came out around 10ish, so it took about a couple of hours before it started to pop up, and sure enough, it rallied intraday highs and then rolled back down and settled in pretty much at its highs at the close. Terrible price action. I've been get a lot of emails. I've been stating to the emails and replying back, stay away when you don't have an edge. There's no reason to trade. And if you could see, obviously, unless you're carrying positions, then you need to manage it accordingly. No sense getting out of them. But if you're trying to trade intraday, this is just absolutely horrible price action. Look at this. Markets rally from the bottom, intraday highs, sells off. Doesn't even make the high, sells off again, and then rallies. And now we're up at about 4 handles in the pre-market here. So terrible price action, which tells me the volatility's picking up at these levels. Remember, the markets are fairly valued. They're not cheap anymore. So you have to realize that willing sellers will come in. We do have a ton of red flags, like I've mentioned. That does not mean to go out and sell the market. What it does mean is that tighten up your stops, use caution, reduce your risk. And that's really what we're doing here. And again, cash is a position. When in doubt, cash is a position. And when this market is like this is something that's telling me, hey, the markets are about to vacate the area here at these levels that we're in. So we don't know what direction, but if the markets do break out higher, we'll definitely challenge the highs. And I think at that time, if we do challenge the highs, get into that 1870-ish area, I think that's going to be a perfect spot for reversal, and we'll see what happens if the market does reverse. Now remember, the longer-term picture is healthy. We are still in the uptrend channel on a weekly chart, so the uptrend does remain intact, but you just can't go straight up every single day, obviously, where you need a pullback, and it's healthy. So I'm going to dial into the charts here. Here's another concern is the bonds, right? You have 30-year bond futures, the ZB. Now, if staying in this channel, it is a downtrend channel. The volume is a little bit lighter than expected, and you can see it's making lower lows and lower highs. So it is sort of a bearish pattern. But if you look at the other side of it, it's actually a bull flag. So we have a bull flag pattern, and we're holding at the upper end of the range. If, in fact, breaks above the 200-day moving average, you're going to see bonds move up. And you know it's inversely correlated to equities, which would put pressure on equities because you'll have that rotation coming out of equities and into bonds for a safe haven. All right, and also you'll see the healthcare get bid up again. It has basically been smashed the last few days, but you'll see healthcare catch a bid as well as consumer staples. Okay, so bonds telling me that, hey, we have to be careful here if you're looking to buy equities. Another one is the Japanese yen. As we all know, it's inversely correlated. The yen future is inversely correlated. If you are looking at the dollar yen, okay, it does what the markets do. So it follows the S&P. So dollar yen here kind of breaking down. Now this is the yen future, so it's staying right capped by this Fibonacci cluster that we have here of resistance. So it has not been able to get above it since January. But remember, if it does have legs, then you're going to have additional pressure in equity. So we need to watch this closely. Okay, daily chart of the ES, we have a little symmetrical triangle here, upper end of the range. Now remember, the 1272 extension has been capped pretty much all of March. Now we do have this symmetrical triangle. If we do start to break out of it, then I think we'll challenge that 1272 extension again, and then let's see if it has enough legs to break out. If it does, you'll see that 1618 at 1918, which coincides nicely with the upper end of this uptrend channel. Okay. Here is the hourly chart. Remember, we have determined that we have a head and shoulders pattern at the upper end of the range, and we have the neckline coming in at 1846. And you take this top to this bottom. All I did was just bring it right back down here, measured down to about 1817, 1820, and here is this longer term trend line now, support. So if we do break this area, look for an 1820, 1817 test, at least for the start, for the first shot. Okay, but right now, in order to alleviate this bearish pattern, we need to really start taking out the head here and then start moving higher. But right now it's still valid. It has not triggered, so it doesn't mean anything until it triggers, okay? But we do have this head and shoulders pattern on the hourly chart. Here's the overlay, spiders, gold, and of course bonds. And as you can see, TLT here, the bond ETF, is starting to break out. If that happens, remember, that should put pressure on equities. Bond guys are the smartest guys in the room, and that's for sure. And we have GLD. Now, obviously, GLD is moving because of Janet Yellen's comments last week. It is interest sensitive, so it will start being it is a market mover, and of course, when you have that interest sensitive, Janet Yellen speaking about the short-term rates starting to move higher in about 6 months, obviously put pressure on gold. Okay, but that does not mean that gold doesn't move higher. Now, take a look at the EEM, the emerging markets here. Remember, we have a worldwide market. We need to follow what's going on, and if you just do this, I just wanted to show you in the emerging markets now. This little area really took the markets down, if you remember, back several weeks. And then, of course, we rallied, retraced, and then we sold off again. But now it looks like that the good spotlight here in the bull camp is the emerging markets have now gapped up and broke below this bearish trend line. Now, one day does not make a trend. And as you can see here, we're above this 38% Fibonacci retracement. Logical for a spot for a reversal. Usually we like to see this 50% here or the 61.8. So you can even rally this high and then roll back down again. Look at the demand up in here. The supply that we have up in this area here. We have big volume profiles. So if we get past above here, we got a little thin zone right up into this 50%. But again, constructive for the bulls that we did break back above it, because remember, the EEM definitely took down this market several weeks back, so you need to pay attention to what that does. All right, so here's the TLT on its own, and as you can see here, we're just chopping around here at the upper end of the range. Now, if bonds were so weak, we should be breaking down in bonds, which we did not. Now we're holding back above the 200-day moving average. So to me, that's a word of caution as well. So you don't want to be holding a ton of longs, and if that's the case, you want protection. So you want to buy protection, and again, with the price, the crazy price action up and down, intraday highs, and then sell off immediately, tells me that this market is vulnerable to the downside. Okay. Now remember, that doesn't mean that we can't run up and test these upper end of the channels. And here's the spiders, and again, classic example. We're just below the 20. Really didn't do much, as you can see. Mostly the movement was in the Dow Jones. The other indices didn't do much at all. So you can see the spiders here didn't do too bad, but well, you're still below the 20-day moving average. And again, volume is a little bit light here on the move up. Now the transports here are held in pretty good and actually bounced a little bit. So I do like the transports holding in. As you can see, the Bollinger Bands are starting to pinch. That tells me that we have energy building. Volume was okay for the upside, and we're above the 20. So again, pretty constructive. Concerning is the Russell, another one of our secondary leaders here, now below the trend channel. The longer it stays below, the longer it's gonna, the more detrimental it will be to the downside, because it can't get above this upper trend line here. So watch it. But again, 50-day moving average looks like it'll be a logical spot to do a test. And then if that breaks, then obviously you'll have your February lows here. Okay, and the February low is going to be really key and pivotal here. As you can see, if it breaks down here, this is the Qs. Now the Qs did okay, really just held in there. A lot of big cap tech, a lot of the leaders are breaking down here, guys. Okay, and as you know, healthcare, which is heavily weighted in the Nasdaq, also took it on the chin as well. Then we'll go into some of the sectors after this. Diamonds here again. Was up. The ETF for the diamonds didn't really do too much, though. As you can see, we're still hovering above this trend line. So it's still a good thing, but we want to see some movement now. We want to see this thing either breaking out or breaking down. The more this thing chops around here, the more it just really just kills all of the day traders. I mean, just bouncing around back and forth here, it's not good. It's bad volatility. All right, so I want to go into a couple of sectors, and a couple of sectors that I'm starting to see some movement in, some money flowing into, is alternative energy, and yes, the dirty coal, KOL, which is the ETF. We had 4 nice days up. Now, I'm not saying to go into this coal sector yet, but you have to keep an eye on some of them. The bigger names, BTU, CNX, those are the better names. You do have some of the smaller names, the ACI, the ANR, Walter Energy, WLT. But you want to stick to the BTU and the CNX, really the better ones. They're the big leaders in the group. Keep an eye on this because a next pullback, make a higher low from the previous low will be easy to manage in the KOL. Now let's just show you BTU. You see, had a nice move, fill that gap lower. And I just think that I just have a funny feeling that looks like money's flowing into the coal, and I mean just for a trade, a couple of weeks. So watch the BTU here. This is my favorite out of the BTU. Now the XLF, some of the banks are starting to hold up okay. Obviously with the short-term rates rising in the next several months, it'll help the banks with their bottom lines here. So the ETF doing okay, holding at the upper end of the range. That's what you want to see. As you can see, look at JP Morgan here. JP Morgan's a little bit extended. It's going to need to really come back into this 50-day moving average again. But as you can see here, another good stock. Citibank here, I like. This is one of my favorites. I do like this here above 50. And as you can see, we'll just put that right up in here. You'll see why. Nice little channel and holding above 50. Even if it dipped back to the 50-day moving average, still making a higher low from this previous low. I do like Citibank here a lot. Goldman Sachs, a little weaker than expected. I thought Goldman would hold at least a 50. Now it's at the 200. So let's see what happens here with Goldman. It's going to need a little bit more backing and filling. So really wouldn't be looking to buy this because you're looking just to catch a falling knife here. Now some of the builders are doing okay. But again, I think now, which is good, right? The builders broke out. We talked about like Toll Brothers breaking out and now settled in here to the lower end of the range, which is fine. That's what you want. It's going to give you another opportunity to buy Lennar and the Toll Brothers much cheaper. And as you can see, when we broke out here and we started rising here, we said, okay, now's not the time to buy it when you're up at these extensions. So rolled in, we rolled back down. We tried to break out and failed, so that's the first test. So now let's see it chop around above the 200, let it get above the 50, and then we can look to buy Lennar again. That's one of my favorite builders. Here's the XLE again. Energy stocks look like the money's flowing into them, so it'll be interesting to see what the crude inventories are going to be like today. But I'm really liking the alternative energy and even some of the crude names as well. Here's the oil and gas, another good sector. My favorite would be Valero out of this sector. They're definitely the best to breathe here. And as you can see, really just waiting for a breakout here. And Valero, upper end of the range, doing absolutely nothing wrong. I love Valero here for a breakout higher. And then you have the solars. Now, solars are a little bit different. Obviously, it is alternative energy, but it's starting to come into some distribution, which is fine. That's going to look to give us a better entry. Now, some of the bigger solar names here, like TSL, smaller, obviously $14 number. Let it bounce, let it digest here, and then let's see if we can get some sort of a rally here. I think the solars will come back into play big time. And as you can see, First Solar I mentioned here back in December. I think it was right around in this area here. I said that some of these names you're going to see 75 to 100 bucks, and sure enough, it's not even the first quarter, and we're seeing $75 in First Solar, which tells me money will be flowing into this name. So no need to chase it up here. Let it come back in, retrace 50% or so, and then you'll get a better entry because your stops are going to have to be way down below here. So you need to realize if you're looking for a play, if that's the case. But First Solar did great. Now, Solar City, excuse me, another upper end or higher quality solar stock. I think also, as you can see, the reason why this is down because they reported numbers, but again, numbers are gone. It's behind them. Look for some sort of a bid in SCTY, Solar City, another one of the bigger players